Welcome back to the program. You're still watching Nedbank Business Watch this Wednesday. It's the first Nedbank Business Watch of the month, and we want to chime into the global markets that are obviously reacting to United States President Donald Trump's latest address to Congress, where he outlined a budget plan that includes substantial tariffs on imports from major trading partners such as Mexico, Canada, as well as China. Now, investors are concerned that these policies could lead to stagflation, obviously slowing growth coupled with rising inflation, which has already put pressure on the United States dollar. But it seems to be a lot of financial jargon there that may elude us. But luckily, we do have somebody from the Treasury Department from Nedbank Eswatini, Nozibusiso Dembe. She's the Treasury dealer. She helps us understand perhaps the implications that come with the utterances of the Congress as well as the upcoming budget speech. Good afternoon to you and welcome to the program.
Afternoon.
Loving the orange, by the way.
Thank you so much.
Absolutely. Let's get into it, man. You know, the rand weakening, of course, we are seeing it weaken against the US dollar, but the dollar itself has been under a lot of pressure following Trump's assertions. Talk to me about what the primary driver here is.
Thank you, Swiso. So I think the theme across markets lately is just volatility.
Absolutely.
We've seen the rand go up and down. Unfortunately, we're pegged to it, so it impacts us too. In the time that we've seen it, it's been impacted by a couple of things. By the budget that was postponed a few weeks ago, as well as US President Donald Trump's tariff plans. And on the side of the budget, what was most impactful is that no one expected it. We've seen the GNU since it was formed in June. There have been disagreements around education legislation, around land. We're familiar with that and we were expecting it as a market. But what we were not expecting is that the disagreement would lead to a point where the entire budget speech is postponed. And this happens amidst all the changes that are happening ever since President Donald Trump went into office about 6 weeks ago. And it's just been a lot going on. More recently, as you've mentioned, there have been changes to the tariffs. 25% tariffs were imposed on Mexico and Canada. 10%, an additional 10% was imposed on China, leading to 20% tariffs. And in retaliation, these countries have also retaliated, where Beijing imposed tariffs of 15% on farm imports coming from the US. Mexico is expected to impose tariffs also. Canada imposed 25% tariffs. So we're literally watching a full-on trade war.
It's quite interesting because, you know, the education conversation in South Africa is one conversation, but the land one also ties into, you know, how Trump and Elon have reacted to what is happening to South Africa. And it's quite concerning just to learn how much power America has right now, indeed. And when they sneeze, we all catch the cold.
Absolutely.
But I do want us to understand something that is some sort of a contrast here. We are seeing the dollar weakening, but the pound and euro, they have gained slightly against the rand. What is the factor here? Is it independent or it's the same story?
So obviously, like you said, when the US sneezes, we all catch a cold. So everything does get affected by the US. But on the side of the pound, we've seen lots of gains from the pound, I think, in the past 1 day or so. And this comes after a bill to a 500 billion euro deal was signed for infrastructure in Germany, and that really impacted. I said the pound, the euro. That really impacted the euro, and it really gained strength because of that.
Okay, we are expecting that Trump makes his budget speech. Is it the 12th of March? I stand to be corrected there.
The 12th of March is the SA budget postponement.
My bad, yeah. So how do we expect that to affect indices?
So Trump already addressed Congress this morning for us, yesterday for the US, and there was a lot of mixed reactions around that. In fact, during the very long speech of apparently 100 minutes, some of the Democrats actually interjected and walked out. So it had a shaky start. But he also did indicate that there would be a need for us to power through, or rather them to power through the changes that the tariff changes would have on the economy.
It's quite interesting. Let's move into commodities and equities. Gold down per ounce. Is it $2,915.61 per ounce, and this is despite economic uncertainty. What is driving that price action?
So currently, the price of gold is trading at $2,915.61 per ounce, and gold did fall under pressure due to rising U.S. Treasury yields. As investors are really trying to see the impacts of Trump's tariffs on inflation and global trade. The price of Brent crude also currently trading at $72.41 per barrel, and the price of Brent crude steadied after hitting multi-month lows because the market is expecting that the major oil producers will start to increase production in April.
Okay.
And also there are worries around the U.S. tariff war and whether it'll slow economic growth, and also the worry that it'll also reduce oil exports, especially because China, who's in the thick of the war, is one of the biggest exporters of oil.
Everything is in the red, because I'm also realizing that even with global equities, everything is in the red. I mean, JSE All Share Index, negative 0.95%, FTSE, red, S&P 500, red. Everything is red here. Are investors moving away from risk assets in response to Trump's final, or rather fiscal direction?
Yes, absolutely. And the worry for investors is around risky currencies.
Yeah.
So you can see everything absolutely is in the red. And yesterday, as Trump was giving the speech, there were some changes. So the S&P 500, for example, opened quite low due to the risk around Trump's tariffs on inflation.
Wow.
And throughout the day, as they met with Congress, there were changes.
Yeah.
During the day, also the U.S. Commerce Secretary hinted that there might be tariff compromises with Mexico and Canada, and that gave it strength. But then as the Congress speech was going on, we saw it start to lose strength, and it currently is where it is now. What's leading the losses in the S&P 500 is the financial sector as well as the industrial sector.
Yeah, let's look ahead, even for a minute, if we will. What are some key indicators that investors should look out for, potential shifts in the market?
So the first thing would be listening out to just what's happening in general. Inflation is something that the market is really keen on seeing.
Right.
Those are some of the impacts of all these changes. In fact, unfortunately, what is the African proverb? When elephants are fighting, it's the grass that suffers.
Yeah.
Exactly. So unfortunately for your consumer, they are going to be impacted by this. It's hard to definitively say now what the impacts will be, but the expectation is that this will be inflationary. Data came out actually of U.S. consumer spending for January, and it had decreased, which indicates that the consumer is there's a reduction in consumer buying power.
Yeah.
And that's now you and me. So there will be inflationary changes. Again, inflation for the US in January was 3% versus December, where it was 2.9%. What does that mean? High inflation, high interest rates. If interest rates are high, our buying power is decreased.
Yeah.
So there's a lot. I think inflation is a key indicator that we should be looking out for, because we'll be seeing real impacts on that.
Thank you, Nozibu. So the word of the day, volatility, that is exactly what is prevailing on the ground right now with everything that the United States president has been doing. Let's go for a net break. We'll be back shortly.